Joining us now is Santosh Rao, research head at Manhattan Venture Partners, which owns shares of Palantir. Thanks so much for joining us, Santosh. Good to see you as always.
Hi, Wilfred. Thanks for having me back.
There were some reports earlier that some insiders didn't manage to trade stocks today. I just wondered if you guys had tried to sell at all and managed to, if you had tried to.
Yeah, I haven't heard that. I think it was sorted out after a while, so I don't think that was a big issue. Maybe initially, from what I hear, there was some confusion, some backup and all that. But overall, I haven't. It's not a big issue at this point. So
overall, how would you grade the day? I mean, it closed up 31%, despite some of the controversies over the voting shares and the government work and everything else.
Yeah, I think the opening was great. The debut was very good, in line with what we expected. Just to put it in context, I think Spotify, which was another portfolio company, that was down 10% at the close. From the opening price to close was down 10%. Slack, which was another company, that was flat at the close from the opening price. And this one is down 5% from the opening price. So I think, and in terms of reference price, they're still very high. So I think this is very good opening. The company set up well. We didn't want it to run up too much and then try to back into it. This is a great start. The company has momentum, like I said the last time. There is the Foundry product has come along very well. The product line, the sales pipeline is pretty good. So I think overall, all set. The company just has to execute.
And if they do execute based on your expectations, when do you see this company being profitable? And do you think it's an issue that it's not yet, given that it's actually 17 years old, not young like some of the other recent tech IPOs?
Yeah, like the CEO mentioned, Karp mentioned this afternoon, they've been investing. There is a path to profitability, maybe in a year or two, based on our numbers. So they're almost there. So that's not an issue. The gross margins are pretty high. Their software margins, and they're getting there. The contribution margins are pretty big. So all the fundamentals, the basic metrics, are pointing to the right direction. And they're investing. They didn't have a dedicated sales force in the past. Just last year, they started building up their sales force. And that could be one of the reasons why their customer count is still small on a relative basis. But it's still concentrated and big in terms of the quality of the customer base. But in terms of size, it's still not there. So I think the dedicated sales force going forward will expand that. So let's see that.
And so now that it's listed, given that you were an early investor, did you sell any at all on day one? Are there plans to sell any of your stake in the short term?
No. We are going to hold that. We've been long-term holders. I mean, through the thick and thin, so to speak. I mean, this company has not been a cakewalk. It's been up, down, up, down. In the last 2-3 years, I would say it really came together, and it's executing very well. We're going to hold on to this.